Well, all things considered, a fairly muted session, 10-year Treasury futures in mind. The overnight session started off with a fairly bullish undertone given the uninspiring 10-year auction that was just witnessed in the afternoon. Going into the European session, things changed a bit. At first, ECB did raise GDP forecasts. They added 0.5% to the inflation forecast. They're keeping their asset purchases and pandemic emergency purchases in place. But the whole thing changed when the ECB implied that they were ready and able to buy more down the road, more than they're purchasing today. And that definitely changed the tune and the tone in Treasury markets, where we saw the German 10-year bond drop to a 3-week low. Going into the US session, I would say that most of it was bearish for prices in 10-year Treasury futures, at least construed that way. Jobless claims came out at a 4-month low. Continuing claims came out at 11.5-month low. COVID news, the 7-day average dropped to a 4.75-month low with regards to new infections. We saw the S&P 500 pierce through 3-week highs, and 10-year break-even rates were at a 6.5-year high today. So a lot of that was definitely bearish for the market, although the market didn't respond like most people thought it would. It's been around the flat line towards the afternoon, despite a 30-year auction that came out pretty good. That said, looking at the CME Group CVOL, pretty interesting when you look at the volatility curve. On the 1-week basis, the volatility is on the low end of the scale. 1-month basis volatility be basically right in the middle. At-the-money vols are moderately lower. The put wing, the downside strikes, down, as are the call strikes. And beyond that, activity in the 130 strike, the put strike, and also in the 133 call strike.